Before we dive more into Tesla, we usually start with the macro market. When you have Jack Dorsey, Elon Musk, and Cathie Wood all talking about something, it's sort of like, pay attention. What do you think?
The government has never been really spending at these sorts of levels. There's this modern monetary theory, which just assumes that debt doesn't matter.
The ability to print more money indefinitely if they really need to or decide to. It's a whole new option that before being on the gold standard wasn't really an option.
The way that this has always been fought in the past is by raising rates. But if the Fed starts raising rates, then the budget gets even worse. But it seems like something's got to give in this equation. Either you've got to tax like crazy or cut like crazy, or just inflate your way kind of out of this by printing more money. And I think that's what's most likely to happen, which could lead to, maybe it's not hyperinflation, but certainly a lot more inflationary pressure than we've seen in our lifetime. You will see a lot of rising price pressure. I think we're already seeing that in wages kind of across the board. Every business owner I know is having problems, retaining employees and needing to raise wages.
Yeah. Another thing we wanted to talk about was Snap. Took a huge hit from their earnings. I think it was like 120 or 130 billion market cap. Now it's like an 87 billion market cap. And
Apple has been, they pushed out in Q3 this new iOS 14.5, which had, some user privacy changes. Snap was kind of aware that this was coming, thought they could, more or less muddle through it and kind of figure out what the changes were and can kind of reestablish their advertising business. What they found instead is that they were having much more difficulty actually, providing that targeted advertising that their kind of existing customer base was relying on. What they said on the earnings call, which I thought was pretty interesting, is that the brands have really pulled back on the advertising just because they can't, really clearly target those individual users that they were finding. I think it's going to be a shorter term issue. The preliminary data seems good. It's just you got to kind of repackage that value proposition.
Seems like Evan Spiegel is one of these incredible founders that has a vision that he's pushing and runs a tight ship. And I think there's still a lot of promise in Snap rising and becoming bigger than Instagram and sort of like a rival to TikTok in some ways too. Their total addressable market for anything metaverse related is pretty huge. So I think there's still a lot of upside potential in the long term if they execute well. Yeah. So speaking of Tesla, this thing's so volatile right now. We had a big options bet we put on like 2 months ago for when the stock was around $720 at the time, I think, when we put it on. Yeah, it was November 19th expiry. And it was 900 call strike. We bought for like an average price of like $8 or something. Like, we watched it slowly go up over time. Like a week before earnings, it was at like $13 or $14. We're both on the same page. We sold half at like $13 or $14 to get most of our money back, so we could hold the rest kind of like with house money. Then the earnings came and it went up, and we were like, "Wait, earnings is great, but every earnings the stock sells off after." We were convinced, and we got like kind of cute, and we were like, "All right, let's just sell it right before earnings at $20." And sure enough, the opposite of what we expected happened, and the stock just took off and kept going up and up. And
the stock was at like 1,090 or whatever earlier today. I'm sure that would have been worth, we had 1,000 of those contracts. So, that would have been worth almost 20, like that would have doubled our fund. We had a nice, 2x return on it roughly. With earnings, even if the stock goes up like $20, let's say, on a good earnings report, the implied volatility on an out of the money option like that would generally collapse. To be clear, the fund's doing very well in this environment, right?
Yeah. But it would have been an incredible month.
We had an incredible 2020, a solid 2021 for sure. If you were to kind of summarize what you've learned this year relative to last year, are there any meaningful takeaways?
When we do those options bets, like that bet we did for the 900 calls, we didn't think it was likely, but we liked the difference between what the options were pricing at the time versus what we thought the probability was. But I think we just have to kind of be consistent. We're going to stick to our gun.
Yeah, it's a learning curve, but I think certainly just happy with where the fund is overall right now, and it's been really fun to kind of be a part of this.
Yeah. So the Hertz deal, that's the big news.
I loved it kind of right off the bat. Hertz's fleet is like 500,000 units, something like that altogether. So it's a really sizable percentage of their entire fleet. The easiest takeaway is just that it makes the 2022 projections a little bit easier. But the thing that I think I'm a little bit more excited about is just the fact that this is going to be, rental units. I think awareness about EVs in general and Teslas in particular is still really low. I can't think of a better way to kind of spike that knowledge in the customer base than by, getting, EVs out there for short-term rental periods.
So there's something here that Elon sees in Mark Fields and Hertz, I think. And, I don't know, there's something special about it. I can't quite put my finger on.
I'm wondering if Hertz would even want to purchase full self-driving for many of these.
I think they'll at least do the subscription, if not the full self-driving. In a year from now, end of next year, when they complete the order, I think he's thinking that robo-taxis will be able to be turned on and be the largest asset price increase in history that he's referred to. At that point, these cars are no longer rented to customers. This is a fleet operation of robo-taxis that Hertz manages.